Good morning, everyone. This is Fahad, and I am back. Sorry about that delay last week. You guys know what my situation is currently, as I'm no longer part of Option Monster, but I will continue to do these videos going forward. And so today I want to take a look at Yum Brands. The symbol is YUM, Yum Brands. Now we're gonna dive as usual. Remember the three critical ingredients about every single time I want to discuss a particular opportunity is based on fundamentals, technicals, and option activities. So that's exactly what we're gonna do here today again. So pay close attention and let me explain my logic. So first we're gonna dive into technicals. All right. So here's the daily chart of Yum Brand, symbol YUM. And I've removed all the moving averages and whatnot because I don't care for them. So first, the most important thing is that see how this thing broke out sharply on high volume with the rest of the market in February. All right, so there was high volume, push higher over here, big volume, and then once again push higher here again in the middle of the March after some analyst upgrades, and then it tried to break out after a very strong beat on earnings per share, although the revenues were slightly soft and mixed expectations, but it tried to break out on a big beat on EPS line back on April 22nd when it reported earnings, but it turned into a failed breakout. It did not have the lasting power. I think partly that was driven by the overall market sentiment, which was starting to stall and roll over, but I don't think that it has significant downside from here, and I think it's going to push higher after this tiny little pullback, fail breakout, tiny little pullback. I think you're going to see this gradually trend higher and go all the way up. So what I'm looking for is, see this once again, one of my favorites, volume over price, resistance and support bars. So here, right here, okay, this is 82.68. write this number down, 82.68. that is your technical breakout level, 82.68. all right, I believe that once the stock moves through 82.68, it's not gonna be like similar time, this failed breakout attempt. I think you will see this breakout gradually higher from here. So where does it go? Looking at this volume over price resistance, if it breaks out through 82.68, you're going to see some minor resistance all the way up at 87.78, which is good $6 to upside, so call it about 8 to 9% to the upside. $87.80, let's call it. It's going to be minor resistance, but the biggest resistance does not come into play all the way up here, which is $90.50. So from 82.68 or 82.70 all the way to 90.60, you're looking at good $8 to upside, which is 10 to 11% to the upside. That's what I'm focusing on. This is a swing trade. If you're making an entry over here, you're targeting all the way to 90.60, let's call it. Okay, you want to put a hard stop right here, which is the volume over price support right here. You want to put a hard stop right here, which coincides with the double bottom that we saw 2 weeks ago and the double bottom that we saw last week, and that number is 78.95. okay, so call it round figure 79. Put a hard stop at 79 with the stock at 81.30 here, so you're looking at about $2.30 to the downside, which is about 3%, 4% to the downside of the hard stop, and you're looking for a breakout and move all the way to 90.15, 90.60, which is good 10 to 11% to upside. So there is your technicals. All right, on the option side, now this is where I'm going to go. I don't know if you guys noticed this or not, but this is actually from last Friday, from May 6th. So in Thinkorswim, I'm using the previous day activity. All right, so here's the option activity. This is the think back features in Thinkorswim. This is from May 6, 2016. All right, and so this is from Friday. If you scroll down, you will notice there were buyers last Friday of January 17 100 strike calls, with the stock trading at $80.96 at the time. So these are good $20 outside, $20 away from the current price, out of money. There were buyers of over 8,000 of these January 17 100 strike calls. All right, and today, this is the option chain. This is the live option chain from today. If you scroll down, you will see that large call buying is now reflected in this 7,800 open interest in the option chain. Okay, so they bought about 7,000 some of these in large lots, and they paid up to $1.35 for it. So I pulled the history behind it. Here's the chart. So Here is the scanning all 20 plus lot sizes of what happened. Okay, the total percentage of calls that were bought on Friday at that particular strike in January 17100 strike calls, 94% of them were bought. Some of them were bought in big lot sizes, and they bought it within 2 minutes time frame. I mean, they came around 12:49 p.m. and they were done accumulating by 12:51 p.m. So they came in hard. When the bid and ask was $1 to $1.35, they were buying it for $1.30 to $1.35. I mean, so these are the price fills that they paid. They were coming out aggressively. There's this big lot size that was bought for 2,900 contracts, was bought for $1.35. Then the 500 here, 500 here, 500 here, and then lastly they were finished buying at 2,000 contracts. The last order at 12:51 p.m. also for $1.35 on the offer. So collectively they bought approximately $950,000 worth of calls at the January 17100 strike calls. These are $20 out of money, almost like 25% out of money. And so that's that. All right, so we got this bullish activity that took place on Friday that is now reflected in the open interest. We got the chart that, okay, now is already starting to power higher just as I'm talking. This was unchanged when the market opened, and now it's up 0.7%. So once this thing breaks out through 82.70, I think you're going to see the steady rise. The swing long trade is going to see the steady rise all the way to 90.50. And now let's take a look at the fundamental side. Now here what I did was I basically went back and I put together the quick history from the last earnings report as well as what I'm seeing as a potential catalyst. So pay close attention over here. So first of all, on April 20th, when the company reported earnings, the EPS was 95 cents. The Q1 EPS was 95 cents versus 83 cents estimate. Big B. Revenues missed slightly to $2.62 billion versus $2.66 billion, and I'll dive into that in a little bit. Worldwide system sales up 5% versus 4.5% that the consensus was thinking, so that's a beat. The same store sales grew 2% year over year. The operating profit grew 21% year over year, and that's mainly driven by the Chinese margins grew 200 basis points year over year. This is the key right here, and I'll dive into China a little bit. As I listened to the conference call, three most important things stood out for me. These are not baked into consensus view from what I can tell. I mean, I read Bank of America, I read RBC Capital, I read Credit Suisse, and I read Jefferies and a few other. And I could just tell by looking at their models that I could not see that these are fully baked into consensus view. So these are the three critical takeaways from the conference call. First one was Yum China rebounded sharply with large check growth of 9% year over year. Compare that to consensus view of only 3% for the rest of the year. I mean, maybe Q1 was an anomaly. Maybe it was just an unusual month. Maybe it had to do with the new year or something else, and they saw this 9% robust growth, and it will not repeat again. But even if I were to assume, conservatively speaking, that this 9% growth they saw in Yum China will moderate to maybe 6% or 5%, that is still significantly better than what the consensus is expecting for the rest of the year for Yum China, which is only 3%, rest of the year. That tells me that the forward consensus view is too low. Second thing was that the company made a special case, and I've never really seen this company make this special case yet. Given the turnaround that they're seeing in the international markets, what these guys want to do is they want to export some of that international trends into the U.S. where SSS is lagging badly, especially in the Pizza Hut branch. I mean, Pizza Hut was down like ridiculous -12% in the U.S. and KFC was down -1% in the U.S. So in order to stop those bleedings, what they're doing is they're bringing some of the international trends that they put in place in the last 12 months and they're exporting them into the United States so they can see if they can basically copy the same growth over here. What does that mean? There are going to be two major changes coming up. It's going to happen gradually over the course of next couple quarters. First one is the faster ovens, new faster ovens, and that will allow company to improve the menu offering. They were big on this. They spent a lot of time in the conference call talking about this. We're going to improve the menu offering by actually improving the quality of the ovens, including faster ones and better ones. So they want to export that international trends into the U.S., which means the U.S. being the biggest market for these guys. I mean, think about KFC, Pizza Hut. It could really make a significant difference on the bottom line. And the last thing I will say, and this is once again one of those kind of things that you will not read anywhere on the internet, you have to dig through the conference call to find this. In China, effective May 1st, a new 6% VAT tax replaced the previously existing 5% business tax. Now you may think, oh my God, that has to be bearish, right? Why? That's a higher tax. 6% VAT tax replacing the previously established 5% business tax. Not so fast, because this VAT tax, it comes with significant amount of new credits that the businesses that are investing in the companies and are improving the trends can take advantage of. So the companies spent a lot of time in the call talking about how this is actually will lower the net tax burden they pay in China, and that means higher bottom line. All right, we don't know the full details and calculations behind it, but that's exactly what the company commented on. So basically, you have Chinese Yum brands growing significantly better than consensus view of 3%. You have company importing those international trends into the US where SSS is lagging, and we'll see some improvement along the way in coming quarters. And the last one on May 1st, with the company the China replaced the old tax with the new tax with a lot of new credits, so I think this is going to improve the tax burden overall. And now the biggest thing, there's a wild card in this, which I'm not exactly sure how it's going to play out, but could be something significant. Back on April 18, Bloomberg reported that China's sovereign fund is seeking control of $8 billion Yum unit. All right, to show you that Yum unit, right here is the article. Okay, this is the shortened URL link, and you can come over here, just Google it, and you'll see China's sovereign fund to seek control of $8 billion Yum unit. I mean, this is significant. This is a massive thing because Yum Brands has. Okay, well, this is not the one right here. Yum Brands has over 7,000 KFC and Pizza Hut locations in China. And this is not the first time China.
Innovation is one of those terms can mean a lot of things.
Okay, sorry about that. This is not the first time. You know, if you here's Yum Brands has the biggest market share than anybody else, approaching almost 24% according to Bloomberg, and China wants a piece of that. And so with these improvements happening in place, with China Yum margins improving by 200 basis points, the same-store sales climbing. Remember, the same-store sales until a year ago used to be minus 6% in China, and now they're plus 9%, way above consensus view. Okay, so maybe there is a vested interest by the Chinese sovereign fund to come in and take a minority interest. From what I can tell, this is not some sort of foreign takeover of a government takeover of a foreign established company that is operating in a foreign country. This is a minority or majority investment taking place, and if that happens, maybe that is the wild card that's going to take this stock rip higher all the way, big time. I don't know where. By the way, as I'm talking, this stock keeps climbing, and now it's 64 cents, so it's now 0.8%. It gradually keeps climbing higher. Anyways, this is the big wild card. This report came out on April 18, so it's pretty fresh, and this was reported by Bloomberg. You can Google it and find out. And so that's that. So basically, here's to wrap the whole thing up. If this thing breaks out through 82.60, you're going to see this climb all the way to 90.60, which is $10 to upside. That's about 11 to 12% to upside. MACD is starting to turn gradually right here. The RSI came down and then starting to turn higher. You had large January 17 100 strike call buying. On Friday, about approximately $950,000 worth of calls were bought, and as I just discussed on the fundamental side of things, you have the company basically that came out with a very bullish view, very strong earnings report last quarter. The growth was impeccable, and you have a wild card, which is China might be making an investment, which is something that could come out at any given time. The last thing, I will wrap this up. This is the chart that I would like to come back to all the time. So here is Yum Brands. If I go to earnings, and right here, if I go to earnings, see this steady 3-year deterioration in forward earnings, and then it finally started to tick higher. After Q1 earnings came out, you saw slight improvement with January 17 EPS estimates improved from $4.03 to $4.11. The fiscal year 2016 EPS estimate improved from $3.54 to a big jump to $3.68. So this is first time in a long time, in almost 3 years of downward revisions. We're starting to see slight tick higher, and I think China is the growth story here that is leading us higher. If that happens, you could see these EPS climb back to the previous levels of $4.50 or $5 a share. And if that happens, I don't believe the stock is going to be sitting around at 80 bucks. So that's it.